Hello, Finimizers. Welcome, welcome. Please introduce yourself in the chat. Let us know where you are dialing in from this afternoon or evening or morning, potentially. Welcome. We'll just start in about 10 seconds, just waiting for the room to fill up. Please let us know where you're dialing in from. Say hi to everyone in the chat. Make sure you're hit to all attendees so everyone can see your message. Awesome. As the room is filling up, let's get started. So welcome everyone to another Finimize Live. My name is Carl. I'm the VP of Content here at Finimize and host for today's event, The Future of Finance, Building Global Platforms for Next-Gen Investors, presented by Finimize for Business. So a bit of housekeeping before we get started. First, like I said, please introduce yourself in the chat. Let us know where you're tuning in from. We've got a global audience here. Make sure you're toggled to all attendees so everyone can see your message. The setup for today's conversation is a 30-minute panel discussion with a panelist who I will introduce very, very soon. And then we'll do about 15 minutes of Q&A with your very good selves. So please use the Q&A box to ask any questions. If you see a question you like, then upvote it. What we'll do is we'll go with the most upvoted questions first. So if you like your question, like a question you see, upvote it, and the most popular questions will be answered. All right, let's kick off. For those of you who don't know about Finimize, where have you been? But today is brought to you by Finimize for Business. It's our content platform that has helped more than 300 financial institutions engage with modern investors. Overall, we help boost engagement, revenue, and retention with content that converts. Through our network of partners, Finimize reaches over 40 million individual investors globally. Check out finimize.com/business for more. And on to the main event. I'm delighted to introduce our two expert panelists today. Leif Abraham is the co-founder and co-CEO of investing app public.com. His role spans everything from strategy to product development and everything in between. And he is joined by Steve Sanders, Executive Vice President of Marketing and Product Development at Interactive Brokers. In his role, Steve oversees all marketing and product development at the company, including introducing the breadth of IB's products to individual and institutional investors all around the world. So we've got an expert panel. We also have expert attendees here today. We've assembled founders, C-level executives, senior leaders from across the traditional finance space, including fintech, startup world, and they are all keen to hear from both of you, Steve and Leif. So let's make this session really hands-on and practical and give everybody here a notebook full of ideas they can use to impress their boss. Attendees, like I said, use the Q&A box and we will come to your questions as soon as we can. With all that being said, let's get into our conversation. Leif, Steve, welcome. Thank you very much both for being here.
Thank you for having me, Carl.
So I guess the first question, given the event is called The Future of Finance, Building Global Platforms for Next-Gen Investors, the $64,000 question has to be that, we're in the global great wealth transition. Somewhere between 70 to $80 trillion in the US is set to move from boomers to Gen X and millennials over the next 20 years. In the UK, it's around $6 trillion. And we know that future generations, current generations who are inheriting behave very differently from their forefathers. So, what does the next generation of investors mean to you? And what do you see firms like Public and Interactive Brokers, what role do you see these firms playing in order to meet their future needs? And Leif, maybe let's start with you.
Cool. First, hi, what's up? Thanks. German originally, so the beautiful accent comes from. If I talk too fast, please shout. So where we think about it is really the sense of that, especially if you think of like the next generation, and obviously it depends on how you define that truly, right? So the way we would think about it is basically think of it as like, your typical millennial and then anyone who's younger than that as well. And if you look at that generation, most of those people, including myself, right, they grew up throughout one of the largest like longest bull market cycles in the history of the world. And that obviously had a massive kind of influence on folks, right? And what, some might still remember the 2008 crash if they were in the workforce at that time, but a large part of that generation likely has not been in the workforce at the time, and so they've really been in this like crazy upcycle, right? And so with that, I think what's happening right now with even just like yield being back and equities not to be the only game in town anymore, is that we will see kind of like a resurgence of all of these other asset classes, and therefore how people think about and kind of construct and build their portfolios, right? And public specifically, we always think about it as like, hey, we want to give people the ability to kind of manage these like multi-asset portfolios. Also, we think there's like more healthy investing behavior coming out of that, as you have the ability to kind of manage it holistically versus having your crypto over here in one corner and your stocks over on this other app, and and so on. And that's really also obviously where like our focus sits. But I think a lot is going to happen just in the world of democratizing, so to say, more of these specific asset classes and so on.
Awesome. That's a really, really great answer. Steve, I guess coming over to you with Interactive Brokers, long history, you're, seeing the change, being a part of the change. How do you think about, meeting these customers' needs?
Yeah. So I've never looked at it by age. As you mentioned, we've been in business since 1995. Before that, we were a options market maker. And when we first started out, we were after professional types. And at the time, that was a few programmers, maybe like myself, or former floor traders, or people who wanted to actively trade. And I think, even today, your audience gets bifurcated into those two different groups. I mean, maybe today there are more people familiar with computers and they want an API interface, or they want a very robust platform, but there's just the do-it-yourselfers in our mind, no matter what age they are, whether they're 65 or 18. And then there are the people that need to go to an advisor because they just don't want to spend the time doing it. Or there are the social traders that go to certain platforms and they're more interested in what their friends, family, and everybody else has to say. But we will continue to focus on the do-it-yourselfer segment, whether it's an institution or an individual, and that's always who we've been, and we're not going to change that strategy.
Fantastic. Maybe just to dig in a little bit more on some of what you said there, Steve. I guess if I maybe take a shorter window, let's take the last 5 years where we've had a lot of change. You had the tail end of the bull market, you had COVID, and then a bull market again, and the last couple of years. What's the biggest change you're seeing in your customers, in those do-it-yourself, in that do-it-yourself group?
Yep. The biggest change that I've seen is our composition of where our clients are coming from. Today, over 80% of our clients come from outside the US.
Okay.
When we first started, it was all US. And, we took the time before COVID to automate our ability to take clients from around the world. We have clients from over 200 countries and territories around the world. So in order to do that, there's a lot of regulation and a lot of compliance that goes along with that. And we built that out to automate it. At the same time, some of the, better well-known brokers in the US just said it's not worth the effort because they were doing it manually and got out of it. So today, I would say that's the biggest change for our client base, the fact that we have clients all around the world. And we make it easy because we have what we call our universal account, where you can deposit a current in one of 26 different currencies. And if you're sitting in Hong Kong and you want to trade Google stock, you can either convert it at the best possible rate to US dollars to buy it, or you can take out a margin loan against your Hong Kong dollars, depending on the currency risk you want to take. But I would say the biggest change is just our reach around the world.
That's really interesting. And I guess we're going to come on to the internationalization piece a little bit later on. So I don't want to put the horse before, or the cart before the horse too much. But I guess there's also an element perhaps there of a rising interest in investing outside of the US, where I think culturally it's perhaps a bit more standard. But we'll come on to that. I just want to get, Leif, your thoughts on, you know, the biggest change over the last 5 years, and maybe what you think that has in store for the next 5 years as a result.
Yeah, I mean, we just celebrated our fourth year in market, and so you know, so we're not even necessarily 5 years in ourselves, fully at least. But the way, like, obviously, like what we've seen is that, you know, we launched in September of 19. So 2020 was COVID, which was obviously a crazy year in many regards, right? The stock market was like the only arena that was still open. Like sports were off and people still kind of were like wanting to cheer for something else. That's where a lot of interest came from, you know, cheering behind companies and like just general interest and just like even just as an entertainment factor to be active in the markets. Then you had 2021, which was basically suddenly the introduction of meme stocks, the introduction of, you know, crazy crypto rallies and so on. And I think what both of those years kind of had in common of that it was pretty speculatively driven, right? So most of the engagement really came from speculation, and most of those entries really came from that. And I think what we've seen specifically throughout the last year and also, you know, like year to date, is how a lot of those investors, so to say, like kind of grew up, so to say, for lack of better wording, where, you know, they were exposed to investing principles maybe throughout those 2 years. But it's, you know, because they were active in speculation didn't necessarily mean that if you might have been gotten burned a little bit or so on, that you stopped it entirely. But what we're seeing is really that people have just like used that education that they had throughout those years and are now applying it in different ways, right? Yeah. The number one asset on the public app year to date is the 6 month T-bill, which is obviously dramatically different than, you know, someone putting it in some, you know, community-driven crypto coin or so. And I think that kind of sense of, you know, people having been exposed to investing principles and now they're applying them differently and they're thinking more seriously about how to build their wealth and how to build their portfolios over time. I think that's a dramatic, not dramatic, but I think like that is generally like a big change that we've seen. And so with that, also just that how retail investors kind of learn by doing in many cases. Yeah. And so market events and economic cycles and so on are these like initiating moments to kind of, you know, learn about something new, to build your literacy, etc. And we've seen it with bonds as well, right? Like when we launched T-bills, we literally had to explain certain reporters like how a T-bill works again, because it was kind of irrelevant for the last decade plus. And now suddenly, you know, it's one of the like it's like the most popular asset suddenly, you know, between these investors on the public app.
Interesting you say that. I mean, we had from our data, you know, if you put bonds in the title of a content piece, you could almost guarantee the starts would underperform and the engagement would underperform. But I think that's been changing a lot recently. Out of interest, Steve, are you seeing the same sort of thing, I guess, from like across your markets, across your millions of users? Obviously, bonds are more interesting, but is there a massive shift in just the ways in which your DIY customers are behaving?
Yeah, there's certainly, well, let's talk about bonds first. We introduced it, I'd say about 5 years ago. And at the time, you know, there wasn't a lot of volume there. I mean, we offer all bonds, munis, sovereign, non-sovereign, treasuries, corporates. So there wasn't a lot of interest, and that's because nobody wants to buy bonds, you know, giving you low rates. Certainly over the last year, we've probably seen it quadruple the number of bond trades because the interest rates went up and there is interest in it. So certainly we've seen a lot of activity there. The other asset class that seems to be hot, overnight, well, weekly options, both on the CME and the SIBO. Because what's happening is certain clients like to come in and trade them on the last day when there's the most volatility. So it's more of a speculative product, but there has been a lot of growth in those weekly options.
Got you. I'm gonna pick you up on a point here, Stephen. You might not thank me for this afterwards, but I'm gonna try anyway. So
go ahead.
You mentioned the sort of speculating on the last day when there's a lot of volatility.
Yeah.
Now, I caught you on a podcast not too long ago saying that you think a lot of the competition, as far as brokers are concerned, are focused on unserious traders and investors who are maybe focused on the social aspects of trading.
Yep.
Now, I just wonder how you think about that competitive landscape in the context of, volatility chasing
Yep.
traders, and maybe also in the context of firms like Public that have been around, only 4 years versus.
Yep. Well, it's an excellent point. What we try to do, we have a lot of education. We have the IBKR campus. We have lots of courses, webinars, daily commentary, API newsletters. We try to educate our clients. We would never tell them, give them any kind of recommendations in terms of, buy this company or go into that asset class. We're a utility that makes the products available to anybody who wants them, along with the education. So we have no control over, if lots, I'm just reporting what's happening, and it's happening on the exchange and we see it happening here, but we certainly wouldn't encourage or discourage our clients from using certain products. We would encourage them to go through the education and make sure they know what they're doing. Look, if a client, they found, that they could make a lot of money through the social aspect of it, certainly, we're not going to say don't do that. I mean, as I said, we're a utility and we like to provide a lot of education.
So, Leif, I'm going to bring you in, but maybe just when you reply, to consider this question as well. I guess, 2019, Public was founded. That was right at the time where we're seeing mass democratization of access to financial markets. And in my view, now we're getting to the point where we're democratizing access to tools and information more and more. But of course, with that access comes arguably the responsibility, but certainly the demand, certainly from the customer side, for education, for making sure people access these tools responsibly. At the same time, especially this next generation of investors, they don't want to feel like they're in school. So how does Public deal with the education aspect without, pushing people perhaps down the classroom path? And is that at odds with, more the incumbent brokers, shall we say?
First off, even just by one thing that we've learned is even just by using the word education, it already kind of seems always a little bit beginner, and you kind of have a little bit of a stigma around it. And so the way we even frame it internally is it's context, and context as much as possible to be happening, when basically context and context, like better wording, but basically when certain things are happening, right? And so we've introduced things like, why is it moving cards? Like you go on a certain stock and the chart is pointing in either direction, and we actually have a little card underneath that tells you of why likely is the stock moving in a certain direction right now? Like what news is this potentially correlated to? Things like that, if a stock is more risky or is volatile or is an inverse ETF or something, we have safety labels where gives you some context around, hey, this is maybe something to watch out for. Do you understand the context here of why people were risky? Things like that. That's from that perspective. The other side is also, when we talk about context, is number one, community. And we think community is super important, because if you open up an app, your chart is pointing down to the right, and you have no way to kind of comprehend that and decompress kind of what's happening, then it can lead to panic selling. It can lead to just irrational emotional decisions. And whenever emotions are tied into investing, that's often not necessarily good. And so what we've seen where community is really, really great is the sense of, how are other people talking about this? What are they learning right now? How are they comprehending this? What is their analysis of what's happening in the market, and so on? And that kind of support group, for lack of better wording, is something that can be incredibly powerful, what we've seen. And I think community in investing has gotten a little bit of a bad rap just from the speculative communities you have out there, in the past. But community is very much driven by its culture. And the culture really defines, what also just the use of the community is, and if you build a community that is, all about gambling on same day options trades or something, that's obviously more risky than a community that is, centered around building wealth over a long period of time. And so community itself is not, neither good or bad. It's really about, what the community is about and what the culture of the community really is.
Got you. Okay, so we've got about 10 minutes before opening up to Q&A. So I just want to remind everyone listening, please use the Q&A box to put your questions in and upvote any that you see that you want answered so we can come to them in order of most popular. I'm going to switch gears, both of you guys. I think you took the challenges both, I think, very well. So yeah, much friendlier questions from here on out, I promise. But you've both had some tremendous success scaling organizations in new markets. So Steve, as you mentioned, Interactive Brokers is in over 200 countries. And even just last year, you introduced a couple of new products, I think Global Trader and Event Trader. Leif, obviously from a product point of view, expanding into fractional art, collectibles, sneakers via the acquisition of Otis, and the recent launch into the UK market. So another $64,000 question. Steve, let's start with you. How do you scale into new markets? And maybe just to make this super practical, do you have like a couple of do's, a couple of don'ts that you can share with our audience today?
Yeah, so the most difficult part, we're in over 30 countries and markets in terms of our exchanges, and recently just introduced Taiwan, and we're probably in most of the places where you can trade on a fair level playing field. So there are two things that are hard about entering, offering trading in a new country. The first is the clearing part of it, and the second part is the regulatory part of it. So the clearing part of it, once you've done a few, well, there's a third part, the execution of the trades. So for the clearing and the execution of trades, once you've done a few of them, when you get to the next country, maybe it's a little bit different, but you pretty much know what needs to be done in terms of the banking and the execution of trades and the order types and the settlement. The piece of it that is a bit harder is the compliance and regulatory. I mean, certainly this is getting harder and harder in every country around the world, and every different country has its unique slant on what they want to have done, and the process for getting approval can tend to be slow. So whereas we have, we're really a technology company in the broker business, and we can quickly get new countries launched from a technology point of view very quickly in a matter of months. It's usually the compliance and regulatory that can take up to a year or more.
Got you. And I guess just a bonus question: what's the hack? What's the tip for figuring out the compliance and regulatory bit, 200 plus times?
There is no set template. You have every regulatory group in every country is different, and you have to go in and you have to have personal conversations, and you have to see what they want, and you have to put in what's needed in that country. That's the problem with it. It's just not, it's not as scalable as the technology.
Got you. And Leif, presumably you had that exact experience coming into the UK market.
Yeah. I mean, the way we also just looked at, because UK has been our first expansion outside of the US. Super new, right? But if you're in the UK, please sign up, give us a bunch of feedback. We live off that, so please do. But the way we really think about it is more of the sense of, number one, user experience. Like, what is the product we think we can offer on the market? And are there also any specific local things we can do that make it especially awesome in that market, right? That might not necessarily be for launch in all cases, right? So in the UK right now, basically how we launched was we want to be the best place to trade US stocks out of the UK. That's the focus that we have. We want to nail that and do that really well, and incredibly cheaply for users. And and we'll nail that first, and then we kind of go into more products. And obviously, you want to, at the end of the day, want your products to be pretty aligned between the US and the UK and other markets in the future. The second, really regulatory environment. The UK specifically has a few routes of how you can get regulated, and so which is not necessarily normal. I'm sure, as Steve knows really well, that you have multiple different alternatives in how to get regulated within the market, and so that was kind of unique to the UK. They're actually quite innovative there in that sense. And the last one is really just like, what does the local competition look like, right? What else is in the market? Can you actually, like, do you believe you can offer something that is just, more awesome than what people can get right now?
Yeah.
And we think in the UK specifically, that was the case for us as well. Like, you obviously have a few kind of like newer investing apps, but things that were very heavily focused on kind of call it a little more like, newbie investors. And I think we hit that sweet spot pretty well between being simple enough for someone who's new to the markets, but being, sophisticated enough for someone who's actually quite sophisticated, and still having an experience that kind of, can serve that spectrum. And I think that's something that's like quite unique to us, not just in the UK, but also in the US. But yeah.
Cool. Really helpful tips there, I think. Okay, we've got 3 minutes until I'm going to open up to the floor, and I've got a massive question to squeeze in before we do that. So let's see how far we can get. Thinking about the next generation of investors, whether that's from a generational point of view or this new group of people and how they're behaving in the DIY space, right? They're evolving, they're changing as well. And I think it's fair to say that's true from a content point of view, from a marketing point of view, and maybe with a marketing lens. We're in a world where, Facebook advertising is one example, isn't as attractive as it once was. So I guess one of the questions there is, how do you think about getting your product in front of the right people at the right price? Is there a playbook there? Are there tactics you can share? And maybe even on the content side, because VP of content, I've got to ask this question. What's your playbook there? Whether it's educational content, whether it's giving people the context or more tools to make effective decisions, and how do you measure the ROI of what you're doing on the content side? And Leif, maybe let's start with you on this one.
Yeah. The majority of our user acquisition is organic, and the way to just bring it up like one level of like a more of a philosophical level, the way we think about it when we put a lot of effort into is to try to build a fan base, not just a user base, how cheesy it might sound. And I think a lot of that comes from that people relate to companies and also stick with companies where you have some sort of emotional bond with it, and that often comes from value alignment, not just from the features that you deliver. And there's a little concept we call emotional retention, where it's like functional retention, which is the one you would usually talk about, is basically the one where like I stick with the product because it's free and it's a nice UI and whatnot. It's also something that's very easy to compete with, right? Like someone else can make a really clean UI or can make it freer than free or whatever the thing might be. But emotional retention is really the retention, like you stick with it because there's something deeper that you connect with on the company, and that is obviously values driven, right? For us, basically that falls into the sense of that as we kind of go through the life of the company, we want to make sure that we can also just like prove the values with actions to then create these moments where those connections can be made. And one of the, I would say like one of the like most famous moves for us is obviously that we're not participating in payment for order flow. And by that, just creating this notion of that, if you're a customer of Public, that you are the customer, not some market maker, not some trading firm around the block, but where it's very clear that like our incentives, like that our incentives are aligned with the user to an extent where it's clear that like we want to build the best product for you because at the end of the day you are the customer, and kind of having this like very clear transparency there and so on. There's one example, obviously. But that's kind of how we think about it. And I think that creates this emotional retention, and that then creates the retention, but also the word of mouth, et cetera, et cetera, et cetera. And like all the good things come of that. And even though it might not be that attributable or that easy to track, I think over the lifetime of the company, like those things just compound. And having focus on that, I think, is incredibly important because over a certain period of time, you will see it in your organic acquisition numbers, you will see it in your retention numbers. And then just like how someone feels when they, know your company or have heard about it. And I think that goes a very long way.
Cool. And Steve, you head up the marketing function at IB. So I guess, what do you send your team out to do there? Are you purely focused on the hard numbers? Are there some softer? Tell me about it.
So, just as our trading business is all about systems and analytics, so is our marketing. So, our target audience has always been very, it's been very specific. We would not be interested in having a TV ad on the Super Bowl because there would just be too many eyeballs there that would have no interest in what we have to offer. So no matter where we advertise, whether it's a banner, whether it's a search, whether it's TV, um, and the creative, we know what the cost per acquisition is for each source, and we know the cost per acquisition for each creative. And we've been doing this for many, many years, and we monitor it, and we're always testing new things, but we, get rid of the losers and double down on the winners. I can tell you that, over my years here, there have certainly been things that I thought would be absolute winners, and they turned out to be failures, and we got rid of them, and things that I never thought could possibly work, and they turned out to be winners. So by doing this and always optimizing this, I think we've done pretty well with our marketing acquisitions. Since I've been here for 23 years. I got here when we had 10,000 accounts. We now will be closing in on 2.5 million accounts, and we've had double-digit growth each year. So this is a strategy that has worked very well for us.
Fantastic. Can you maybe, if you can remember, is an example of something that you thought this has no hope in heck of working, and it surprised you and did work? I think that'd be quite interesting to hear.
Oh, let's see. I could tell you something that my team recommended, and I didn't think it would work, and it didn't work, which is advertising in golf publications and golf websites, and it just didn't do it. And my gut there was always that when people are playing golf, they're not interested in thinking about trading, so it's just not something that would work.
Fair enough. Okay, let's open up to the floor. Last reminder, because once I get into these Q&As, I'm not going to remind you again. Use the question and answer box to launch your question. If you see something you like and you want to hear the answer to, upvote it. I'm going to go work my way down from the most upvoted questions. So first from Ian Brand. For the medium-term investor, what kind of forward-looking tools and information do you think comes out of the AI wave? Who wants to jump in on that first?
I mean, so in the US, we've launched Alpha, which is basically like an investing research assistant, you could say. So what we've basically done is we have access to a lot of data sources, from analyst reports to custom company KPIs, fundamental, financials on companies, earnings call, transcripts, et cetera, et cetera, et cetera. We've basically taken all these data sources. Some of them are unique to us. Basically structured and cleaned the data, trained a model with it, and created basically the possibility for someone to go to any stock in the app, swipe down, and you can ask any question about that stock. And which basically just creates this like incredibly easy and fast way on how to just do quick, small research. And that has been phenomenal and fascinating of like how damn well it works. And so if you're in the US, I tell you like you should sign up and try it out.
I've got to ask, how many people, as their first question, ask, will this stock go up?
Yeah. So our Alpha runs on the GPT-4 engine, and I gotta say it's incredibly good at not trying to predict the future or not giving advice, but sticking to pure factual information that it was fed with.
Gotcha.
And so basically, like if you would ask that, it would basically tell you that it can't tell you because it can't predict the future and whatnot. But yeah.
Okay. And Steve, what's IB's view and approach to AI?
So we have some internal tools, we're developing that I'm not ready to announce. We have our investors marketplace where we have a bunch of third-party tools that people can go in and utilize for AI. You know, my only personal thought here is, you know, when the whole herd is using something and doing something, you know, is there a unique opportunity there? So I'm certainly not saying that AI doesn't work or any other thing doesn't work. I would just leave it to the end trader or investor to decide which of the tools they think could work.
Fair enough. So our next question is from Tina Safarian. What are the panelists' views on investors' needs in MENA, that's Middle East, North Africa, in terms of technology and integration? And what are their views on key initiatives for their respective firms for growth in that region? So, Steve, let's start with you. I guess 200 countries. You must
Yep.
be in MENA
Yep.
already.
Yeah, the Middle East is certainly a very hot spot for us. Not only getting individual acquisitions, but we have a number of brokers there that partner with us. Some of the bigger banks there, and it's, you know, it's branded under their bank name, and they bring in lots of clients. But I would say, you know, for anywhere in the world, the Middle East is probably one of our hottest growth spots right now.
Fantastic. And just to understand a bit better about how those sorts of integrations work. So you essentially you plug in your technology and then it's up to the banks to drive initiatives for adoption and things like that.
Yeah, the bank that generally does the marketing, and we
Yeah.
provide the technology and the clearing and the trade execution and the settlement, and
Got you.
clients will come to a special you know, client portal that's white branded for that bank, so it
Yeah.
looks like that bank. I mean, of course, we have to say on the bottom of the statements that it's cleared by Interactive Brokers, but for the most part, it's integrated into whatever the bank's platform is, or whatever the introducing broker's platform is, so the client wouldn't know the difference.
Got you. And Leif, I guess, is MENA on the roadmap? Have you looked at the brokers there and thought, hey, I can do a better job with public?
I mean, right now it's far away from us, right? Let's crack the UK first, and let's do a good job there, and then we kind of go from there. Yeah. I've talked to a few other founders who have new broker startups in the space, and I think Midas is the one called in Turkey, for example, that's apparently is doing pretty well over there. And I think there's a general sense, obviously, in some of these markets, you know, the incumbents, for lack of better wording, are even worse than they are in the US and co. And also just incredibly expensive. And so I actually think that in some of these like markets, you know, of these like up and coming markets, I feel that the opportunity is actually quite large. And I think you've seen that with some of the local neobrokers in the space. And especially this duality of offering people, you know, access to US markets, which is like, you know, the major leagues that everyone wants to participate in, but then also, you know, having the duality of the local markets, which then also leads to a decent business model with, you know, FX fees in between the two accounts, things like that. I feel is becoming a model that seems to be working pretty well in a bunch of those markets. So, but yeah.
Cool. Question for you, Steve, from Ben O. Steve, what were the key challenges you've encountered while expanding Interactive Brokers into 200 countries? Any advice you'd offer to organizations looking to expand their financial services internationally? I guess compliance.
Well, it's a great question, and certainly it depends what industry you're in. If you're in the banking industry, it's really hard because there's always a mature regulatory framework for banks in almost every country, and you need to go and meet with every regulator. The way we went about our business, we opened in the US, and we offered accounts to anybody in the world. And as regulators from certain countries would come to us and say, hey, you can't continue to do business here unless you establish a broker entity in this country, we would establish the broker entity. So we currently have broker entities in which we've set up over the years in Canada, in Ireland, in Hungary, in the UK, in Hong Kong, in Australia. There's probably a few, Japan, Singapore. So as I said, You know, if another country comes to us tomorrow and says you can't continue to do business out of the US for our residents, we would open up another entity, and we have a lot of experience in that. So, you know, to conclude here, I would say, you know, start in one place, and then, you know, expand and work with the regulators as needed.
I mean, a more bullish way to interpret that is better to ask for forgiveness than permission, which you maybe wouldn't expect a nearly 30 odd year old company to say, but I think really encouraging for people going internationally.
Certainly, that's a good that's a decent way of thinking about it.
So next question here from Gregory. Gregory here, and I'm in Arkansas, and I'm currently building an investment product aimed at millennials. Any advice? I guess to your competition.
Don't compete with me.
I mean, from what I've heard, maybe the advice is put bonds on your platform.
Yeah, I mean, it's I think it's tough often to try to break things down by these generations, and there's obviously an affinity for, you know, certain generations to be more mobile first. There's an affinity for, you know, millennials grew up with the internet. You know, Gen Z grew up with mobile phones around. You know, maybe more skeptical on things on social media because they, you know, start using it differently. Like that. There's like little nuances like that. Okay, but at the end of the day, if you're a semi-serious investor who wants to build a proper portfolio and grow it, your needs will be pretty much the same. You know, you might invest in slightly different asset classes or so on, but your needs will be pretty much the same, you know, no matter if you're a millennial or Gen Z, right? In the multi-asset game, I think what's interesting is that people start their journeys in different asset classes, and you've seen it with crypto, right? So there's a lot of investors out there who started their investing journey in crypto first, and then ended up buying equities later on. And I think the same, you might see folks that, you know, we have a sneaker portfolio in public, for example, where you can invest in like rare sneakers. And for example, like you might find people that just like are deep in sneaker culture who just personally feel that they understand the value of a certain sneaker more than they might understand the value of, you know, a certain stock. And therefore, that's where they start. You know, it doesn't mean that that's how the entire journey will look like, but it will feel like an easier entry point for them. And so I think those are more the kind of things that are, you know, like these like nuances to kind of think about. But generally speaking, at the end of the day, you know, if you want to build a proper portfolio, there are certain tools that you need that just have to be there. Like, you have a really boring example, you know, and you know, Steve will laugh at this, but like, you know, we just now launched that you can like see all your like tax lots on each transactions that you've done, you know, and so on. And it sounds like a very like kind of administrative, like kind of feature, but you know, the people with the biggest accounts, they're the most serious about investing. Like they really, really care about that because it's going to be part of thinking about which position to trade out of and what time, you know, tax loss harvesting later on, et cetera, et cetera, et cetera. And so those things become suddenly super, super important.
That's super interesting. And I think you've probably covered off Gary's question about Gen Z investors and features and products to develop potentially for them. So 2 in 1. Okay, we've got a minute left. I'm gonna go with Bailey's question, which is the next on the list. It's Leif, any plans to expand your product in the UK? Right now, public only offers US stocks, but I think maybe to put another spin on this, and Steve, to bring you in as well, how, when Interactive Brokers sort of expanded, so you sort of, you know, service customers now answer questions from regulators later. How did you approach it from an asset class point of view? Did you just go US stocks first? Did you do currency first? How do you think about that?
Well, when we started out, we had option market making operations all around the world. So we had a good feeling what we could offer around the world. No, we can't just go into any country and offer any product. I mean, for instance, CFDs, which are big in Europe, are a good example of that, right? So we have CFDs on our platform for European investors and for UK investors, but we have a system called trading permission. So for US residents, we have to shut it off. So when we introduce a new product, we do the research in all countries to make sure that there isn't any glaring regulation that says, you know, you can't offer this product here. Crypto is another one. We just can't offer crypto out to the world. We had to go into the US. We now offer it in Hong Kong, but we really aren't offering it to residents of other countries because every country seems to, you know, really be you know, adamant about what they want. For stocks, not so much, you know, almost everybody will accept stocks. So no, we do have to do research on the asset classes.
Got you. And Leif, just to tease you into a product announcement, when are you going to offer more than US stocks to the UK audience?
It will definitely come, no question. Obviously, things like ISA accounts is the thing that always comes up for people, right? For sure. Those things will come eventually, no question.
Awesome. Guys, we're a couple of minutes over. I'm afraid we are all out of time for today. Steve, Leif, thank you so much for joining us. I hope everybody listening and watching has been as enlightened and educated as I have today. Everyone, before you click off, just a reminder, there's a feedback form that will pop up when you click out. Please fill it in. We value your feedback. To quote Leif, we live off it. So hope you enjoyed today's event. To see any of the further details of Finimize, finimize.com, public.com, interactivebrokers.com. Get in touch with us for any other questions and hope to see you all soon at the next event. Have a good rest of the day.
Thank you.
Thank you.